A very good evening to all of you, and we would like to wish you all a very happy new year at the same time. So, this is going to be the very first weekly market presentation for the year 2023, bringing you by the SC Securities Private Limited YouTube channel. And let me begin the presentation with the stock market performance for this week, and then I will move on to key economic highlights from the week and some of the important news and updates from the international commodity markets and the financial markets as well. So let's start with the stock market performance. Another bearish week for Colombo Stock Exchange. As you could see on the screen, throughout the week, indices declined to dive into deep into the red zone. So during Monday's trading session, if we carefully looked at, the SPI declined by around 44 points to close at 8,380.60, and S&P 20 index also declined by 32 points to close at 2,580.87. During the day, turnover was picked up anyhow, and that reported a value of around 2.4 billion. And foreign purchasers also reported an inflow of 42 million, on contrary to 29 million worth of foreign sales. And the same bearish sentiment could have been seen during the Tuesday's trading session as well. So SPI declined by around 13 points to close at 8,367.69, and the S&P 20 index declined by 16 points to close at 2,565.33. And during the day, turnover, however, declined compared to that of previous day to 1.8 billion. However, foreign purchases picked up for the second constant session for the week and reported a value of 63 million over 47 million worth of foreign sales. So, because of the resurfaced talks regarding the IMF delay in board level approval and the electricity tariffs that are coming into effect from this year onwards, and also the loss of investor confidence regarding these factors, and the talks regarding local debt restructuring was the major concerns for the market to decline during the week. And but this bearish sentiment was slightly different during Wednesday's trading session, and SPI went up by 13 points to close at 8,380.87, but S&P 20 index with most liquid shares continued to decline by 4 points to close at 2,560.95. Investors were anticipating sort of a decline in treasury yields, so we could have seen that most of the treasury counters are picking up during the day. And during the day, anyhow, turnover was further climb down to report a value of just 1.3 billion. And foreign purchases just reported a value of 20 million over 32 million worth of foreign sales, resulting in net outflow for the day. But anyhow, the sentiment changed back to negativity, and during Thursday's trading session and the Friday trading session as well, the market continued to decline. So during Thursday's trading session, SPI went down by 47 points to close at 8,334.05, and S&P 20 index also declined by 11 points to close at 2,549.92. However, turnover was slightly improved compared to that of the previous day to report a value of 1.9 billion, and foreign purchases also picked up to report a value of 66 million over 56 million worth of foreign sales. And the same sentiment persisted during Friday's trading session, so the SPI declined by 75 points to close at 8,262.58 for the week, and S&P 20 index also declined by 22 points to close at 2,528.08 for the week ended 30th Jan 2023. And during the day, turnover also declined to report a value of 1.5 billion, but the foreign purchases have notably picked up to report a value of 117 million, and that was backed by some major foreign purchases reported in LB Finance, Master Corp, and John Kills. On contrary, foreign sales reported a value of 7 million. So altogether, if you look at the overall performance for the week, SPI declined by 1.92% and S&P SL20 index lowered by 3.25%. But on a positive note, because of the inflows from the foreign parties, net foreign inflow was reported, and that amounted to be a value of 136.9 billion, 9 million. And now let me move on to treasury yields. So for another consecutive session, the treasury yields declined. So accordingly, 3-month yield declined by 86 basis points to 31.15%, and 6-month yield declined by 65 basis points to 31.37%, and 12-month yield also declined by 12 basis points to close at 29.04%. So, and investors were anticipating sort of a decline in the treasuries, and that was reflected during the treasury bill auction held on Wednesday. And if we look at the spot rate, because if we carefully look at the spot rates that we considered here, the rupee resulted sort of an appreciation compared to that of US dollars. But when it comes to Great Britain pounds and euro and Japanese yen, the LKR resulted slight depreciation throughout the week. And now let me move on with some key economic highlights for the week. So it was reported by the World Bank that their estimates, the growth estimates for Sri Lanka have been lowered for the year 2023 as well. So the World Bank contracts growth forecast for Sri Lanka for the year 2023 to 4.2%. That was a contraction in economy, and they also estimated that Sri Lankan economy contracted by 9.2% for the year 2023 because of the forex shortage, the forex crisis that the government is facing right now. They are experiencing some shortage in imports, and that have resulted to decline in overall output levels. And also, the World Bank says that the poverty during the year 2022 has been almost double compared to that of the year 2021. So the poverty has increased to 25.6% during the year 2022, which was 13.1% during the year 2021. And another important news came from Fitch Ratings. Fitch Ratings have downgrades 10 Sri Lankan banks, their long-term ratings, and that follows the recent downgrade of issuer default rating of overall Sri Lankan nation, which has been downgraded to C from triple C. And the downgrades were applicable to some of the public sector banks and also for the private sector banks. So accordingly, the Bank of Ceylon, People's Bank representing the government side, and the commercial bank, HNB, and the Sampath Bank from private sector has lowered the long-term ratings from AA minus to A. And some other private sector banks, including DFCC, National Development Bank, Ceylon Bank, and Nations Trust Bank, and also Cargill's Bank, has also downgraded their ratings from A to A minus. So apart from that, the other private banks downgrades were not mentioned in the statement. So these banks, the ratings have been downgraded by Fitch Ratings. They are long-term ratings in comparison with the recent downgrade of Sri Lanka issuer default rate. And also the external sector performance for the month of November has been released by central bank recently. So the November trade deficit was reported a value of 450 million US dollars, which is an increase compared to that of a month of October. So however, for the 11 months ended 30th November, the cumulative deficit has recorded a value of $4.8 billion US dollars. And the widen of the trade deficit during the month of November was majorly attributable to the reduction in overall export level because of the reduction in global demand, majorly for the apparel sector exports, and also with the pickup of imports compared to that of the previous month. So that's why the trade deficit during the month of November has been expanded. But when it comes to the cumulative deficit for the 11 months, that is sort of a reduction when it compares with the cumulative figure for the year 2021. And earnings from tourism has reported a value of 81 US dollar million for the month of November, and remittances has also been increased on year basis to 384 million US dollars, which is a notable recovery. And now let me go on with some important highlights from the commodity markets and financial markets. So the most of the commodities have picked up during the week, and the oil prices reported a notable pickup with some demand optimism from the Chinese end with their revival of economic activities after the COVID-19, the lift of COVID-19 restrictions, and gold prices also settled higher with the expectations regarding less aggressive policy rates by the Federal Reserve with the cooling down inflation, and that has gained traction for the gold metal as a safe haven asset. And aluminium prices and copper prices also picked up with some demand hopes from China with the revival of their economic activities. And if we look at the financial markets as well, most of the financial market end positively for the weekend at 30th January 2023. Then that was supported by some positive expectations of investors regarding less aggressive rate hikes to come forward with some cool down inflation reports from the US front. So it was reported that inflation for the month of November has dipped by 0.1% in United States, but it is still higher at 6.5% compared to previous year. But with this cooling down effect, investors perceived the rate hikes to be less aggressive in going forward, so that they have positively reacted to the stock markets, reacted in the stock markets, and that's why the stock market picked up for the week. And this positive sentiment from the US front also could have been witnessed in Asian markets as well. But anyhow, Indian market, the Bombay Sensex market has declined weekly for the week, and that was basically attributed to some major tech firms, the reduction in revenue forecast. Yeah, that's all from my end. So here onwards, Harin will continue the presentation.
Thank you, Sachini. So looking at US oil during this week, we were able to see how US inflation has pushed the price of US oil towards the daily resistance of 80.82, and the price of US oil managed to close at $80 per barrel. So as for now, it will test the 80.82 region of daily resistance and break out above that. We have the level of 86, which is also 16th 16th August low, which is $86 per barrel. So if a clear rejection occurs from this daily resistance of 80.82, it could bring down the price towards the level of 76, which is actually 26-27 low, so September 26-27 September low of 2022. So and the other thing is the price has actually started to trade about 20, 50 and 20 EMA, but that doesn't necessarily mean that there could be a rejection or there could be a breakout. But since as still it is trading near the daily resistance of 80.82, once the EMA is crossed only, and also once the price manages to break above daily resistance, only will be able to see it testing the 86 region, and then a breakout above that 86 region would incline the price towards the daily resistance of 90-92 US dollars per barrel. So we have the all share index. Looking at the all share index, during this week we had a decline, and the next key level is at 8,200, as you all can see, which is November low. And with that being said, November mid low, second week of November low, which is 8,200. It could be tested, and once if it breaks, the next key level is at daily support 7,950, 8,000, which is 8,000 being a psychological area. A rejection from 8,200 could initially bring back the price towards the level of 8,329, and breakout above 8,329 could initially incline the price towards daily resistance of 8,450, 8,500. The RSI managed to close at 34.87. So this is the daily RSI. And looking at the 50 and 20 EMAs also, we can clearly see that the index is clearly trading below these moving averages, which indicates a bearish momentum. So as for now, it seems to be quite bearish. Next, we have the topic of the week. Here, topic of the week would be AEL. And in AEL, this is the daily chart. As you can see, we have a key level of key level over here, the price level of 9.9510, which is actually a demand zone. Previously we were able to see how the price tested that key level and then made a pullback towards the level of 10.5, 10.6, even making even testing the level of 11.2, and also the daily resistance level 11.4, 11.7. So with that being said, if the price manages to break psychological area of 10 rupees, we have the next daily support at 9.2, 9.5. If it manages to make a pullback, 10.5, 10.6 would be the target level, and further 11.4, 11.7 could be the target level. As for now, seems to be consolidating in between 10 and also 11.4. So therefore there's no proper indication. We need to look into the price level coming next week, whether it could actually make a pullback from this area, or whether it could break. If it breaks, the next daily support 9.2, 9.5 could be tested. The daily RSI closed at 39.56, which is actually in the mid-range still. So these are our clear insights from my end, and thank you so much. I hope you'll enjoy this video. Please do subscribe and like. Have a wonderful weekend. Thank you very much.